Prologis Stock, ticker symbol PLD. I ask you what the next stock analysis should be about. And Ghant did ask for PLD, so here we are. This stock is up 8% year to date, which is pretty unusual since most REITs are coming down, especially most recently. On the 18th of July, Prologis presented quarter results where they beat on FFO but missed on revenue. Analysts expect a miss on the upcoming quarter. Most people love PLD stock because of the dividend, and I understand why, with dividend yield at almost 3%. On top of that, they have a 5-year compound annual growth rate of 12.5%, which is pretty nice. And with the stock getting some momentum and being a very popular dividend stock, it is the perfect time to do an analysis. And I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does Prologis do? The company develops, acquires and operates high quality industrial and logistic facilities around the globe. If we dive in the most recent earnings report, we'll see that net earnings were reported at $1.31 per share, compared to $0.82 in 2022. Core FFO was reported at $1.83 per share versus $1.11 in 2022. The results for the second quarter of 2023 include a 0.58 per diluted share attributable to net income from the strategic capital business, while the results for the same period in 2022 include none. Average occupancy rate was reported at 97.5%, which looks really good to me. Same-store NOI was reported at 10.7%, which also looks pretty good. In here we see the portfolio breakdown in terms of location. US is by far the biggest segment with 3,871 buildings, while Europe is second with almost 1,100 buildings. Another important thing to me is that they have an credit A rating. In here we see that transport and freight is the biggest type of goods in their portfolio buildings. Second, we have consumer goods, and third we see beverage. In the top 10 customers we also see some big names. A thing that I really like about this company is the core FFO compound annual growth rate and the dividend compound annual growth rate as well. Both are outperforming the others in this list. And now that we know more about the company, it's time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you lots for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue with diving into the fundamentals. PLD is a 113 billion market cap company. PE ratio is not a fair metric to use with REITs, so I will be using the price to FFO instead. Right now it is sitting at 21.8, indicating they might be overvalued right now. Later in this video I will show you my 3 price targets for Prologis stock, so make sure to watch until the end, because price to FFO is only telling a small part of the full story here. Revenue is at 7.7 billion, and in this graph we see that revenue went up in the long run. To me this looks steady and consistent. We see that margins are going up and down in the long run, which is something that I don't like. I would prefer a bit more steady and better here. EPS is going up in the long run. For a REIT it is looking pretty steady as well. Analysts expect a decline in EPS in 2023 and 2024. Which is very interesting. After that they expect double-digit growth again. For the revenue it is a pretty different, with double-digit growth expectations in 2023 and 2024. But after that they expect revenue to slow down. Return on assets is sitting at 3.8%, which is a low number, even for a REIT. Return on equity looks also a bit on the low side. And the most important number, return on invested capital, is sitting at 2.2%, which is again a low number. But it is slightly higher than the 5-year average, so that is also something that I do like. Current ratio is at 0.34, which is a low number for a REIT. It is going down over a longer period of time. Not a bad thing necessarily, but it is something to keep your eye on. Right now, Prologis has 28 billion in debt. I prefer companies that can pay down at least a big chunk of their total debt with the total cash. PLD has 534 million in total cash, so they can't pay down a big chunk of their total debt. This is something that I don't like. So it's very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up in the long run, which is a great thing. But it has to be said that I prefer a bit more steadier pattern here, and keep an eye on the recent numbers. Shares outstanding are increasing, which is very common for a REIT, since they increase shares to raise capital. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 2.84%, which is a decent number. Annual payout is at $3.48 and payout ratio is at 62%, which is right below the average for REITs. The 5-year growth rate is at almost 12.5%, which is looking really good. On top of that, they have increased the dividends for 9 years in a row. And if you take a look at these numbers, the dividends paid since 2012, you see that PLD did increase the dividends at a decent rate. In this graph we see the expected dividends in 2023, 2024 and 2025. Of course this is an estimation that can be highly impacted by results, but it gives you a rough indication. It's expected to grow steady on from here. Overall these dividends look pretty interesting to me, but how about the historical returns? I decided to compare Prologis stock with the overall market. In this case the S&P 500. Next to that I added REXR and Colt. On the 5-year chart we see that PLD did beat the S&P 500 by a significant amount. In total PLD returned 110% including dividends. Colt had the lowest return. On the 1-year chart it looks pretty different with Colt beating everyone. The S&P 500 had the second highest return with 13%. On the 6-month chart it is Colt and the S&P 500 with the highest return again, 12% in total. Both PLD and REXR had the lowest return. On the 1-month chart it is again Colt having the highest return. All the others are lagging behind. So bottom line, PLD beats the S&P 500 long term, but it is outperformed by the overall market and competitors short term. So could this be the perfect moment to buy PLD stock? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 8, 10 and 12%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm filling in 41, 43 and 45%. And for the free cash flow margin I'm putting in 61, 63 and 65%. For the PE ratio I'm putting in 20, and for the price of free cash flow I'm putting in 16, 17 and 18. My desired annual return is 12.5%, since I can get an easy 10% average annual return with owning an ETF. Right now PLD stock is at $122. I hit analyze and we see a lot of red numbers. And since this is a REIT I'm only focusing on the discounted cash flow value. We have a low price target of $89, which is a big drop from the current stock price. We have a mid price target of roughly $110 and we have a high price target of roughly $137. To me the mid price target is the most justified here, indicating that this stock is overvalued right now. My final conclusion on this stock is that I do like the business. Most fundamentals look pretty good, but the valuation seems a bit off. With the stock outperforming the S&P 500 on the 5-year chart and lagging behind short term, it would be great if the stock comes down even more. From a dividend point of view, things look pretty good, I must say. Dividends are safe and covered, and the 5-year growth rate looks pretty good for a REIT. The yield isn't that high, but if the stock price comes down, the yield will go up. For now, I'm just waiting and trying to find better deals in the market. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.